The crude oil market is in desperate need of hard data following the rout that we saw last week. We broke some key technical levels as supply continued to be the issue at this stage. Libyan production is coming back online. It's now the strongest since 2014. US shale oil has contributed to an 800,000 barrel pickup in production in the US since October last year. Against this, Opec is desperately trying to cut production and try to balance the market. It's not having the impact yet, because one thing is Opec has been cutting production, another thing is they've been exporting oil out of tanks, so the global oil market has not seen the full benefit of Opec's cuts just yet. We do expect that this will start to happen as we move into the second half, but in the short term the market is challenged because we've seen long liquidation start to come in. We do remember that back in January and February we had a very elevated long, speculative long in the market, and it's really only now been through the last couple of weeks that we're starting to see long starting to bail out, and we need to see that long being reduced to a comfortable level. I think we are probably getting close to that following the big sell-off we had Wednesday and Thursday last week. But in the short term, the market is in desperate need of hard data. We're going to see some of that today. The EIA is going to release its monthly STEO, as it's called, short-term energy outlook. It will give us a clue about their take on the global overhang of supply and whether it started to come down stronger during April. Also, the market will keep an eye on their expectations for demand growth going forward, because with the recent worries related to China, there could be some risk to the market as well if demand growth starts to slow. Later on, we have the inventory report from the API, and tomorrow we have the weekly big one from the EIA. Once again, the inventory report from the US has been very important, has been an important market driver during the past months at least. So these are the data we'll be looking out for. And then on Thursday, OPEC will also release its monthly report. So hopefully we will be a little bit wiser as we come to the close of this week. But in the short term, technically, we need to break it back above 47 on WTI and 50 on Brent. These are really the two big levels at this stage. Yesterday, some verbal intervention from Russia and OPEC, especially Saudi Arabia, about extending cuts into 2018, failed to lift the market through this level. So it is really the key level at this stage, which will either provide some comfort to the market if you start to break above. Until we do, the market is still in long liquidation phase.